Hello everyone. In this video, we will continue our second part of asset accounting related to configuration and certification questions. So, in this video, the first topic we will discuss is asset master data. So, if we see the first, we will see the screen. If we see the screen, we can see that maintain fields that should be different in similar assets. So whenever we are creating a mass creation of assets, we can see that description, inventory number and cost center and evaluation 1, 2, 3, 4, 5 fields can be changeable. These are the changeable fields during mass creation of assets. So now we will understand what actually the importance of asset master data. So asset master records are defined and created to mirror your fixed assets used in your daily business. So daily we will purchase many assets and we post many transactions against that assets. So we need to record each and every transaction. So for that purpose we need asset master data. Master data for assets include the main asset number and asset sub number. You create asset master records by choosing one of the following methods. So for every asset master data we will have, it is not compulsory but it is an additional functionality that mainly we have an main asset number. In addition to that, we can also create the sub asset number. So to create an asset, so we use the transaction AS01 and we give the company code and asset class. Based on the company code and asset class, asset master data is assigned to asset belongs to an asset class and a company code. We enter the data for the required fields and also based on the asset class it will adapt some standard values. So and also we have an option to give the reference asset number, so it pulls all the information from that reference asset master data and updates in the new asset master data. SAP also provides that additional option, getting information from the reference asset master data. We can also create multiple asset master records by entering the similar assets to be created. So this is the screen I was explaining in the first part of this video. Like whenever we are creating multiple assets, these are the fields which can be changeable. In this case, you maintain the values for the first asset and then either use the exact same details for all the assets or maintain separate values for certain fields. The range of fields available for you to change is customizable. You can always make additional changes after saving all the new assets in a second step. So moving on to the next slide. Whenever we see the asset master data, the second tab we can see as time dependent tab. So why it is named as time dependent and what all the details are updated in that time dependent tab? Let us check now. In the default tab layout, in the time dependent tab, we make assignments to cost accounting objects such as cost centers, internal orders, WBS elements, and also location, profit center, segment. So we are assigning all the objects related to cost accounting. So the reason why we call it as time dependent is because you can define period intervals for those assignments. So from this period to this only to this period, this cost center is valid for this asset master data. So let us see an example. A printer ordered by and used for a couple of years by one department can move to a new location and charge depreciation to a different cost center from the third year onwards. So it depends on time to time. So till the period when it is in one department, they use the cost center related to that department, and when it moves out of the department, it will use the cost center of other department. So the cost objects which we assign here is time dependent. Report outputs and tasks such as depreciation posting run read the data as valid for the asset on period or year selected. So we will report the outputs. So we are going to run depreciation run and we will read the data valid for that particular period and particular year which we input to run that particular report. So you can also use asset subnumber functionality. An asset subnumber is a separate asset that is still connected to the main asset number. The main asset is automatically given the subnumber 0. Each asset subnumber will have the same asset number but a separate subnumber. So it will be like 1, 2, 3. It goes on. Depends on the subnumbers assigned to that particular asset. You can define the subnumber to be given internally or externally. Usually, external assignment is defined internally for data migration. When the migration is completed, it is reverted to internal. So when we are doing the data migration projects, then we use the external number range because we have to use exact the same numbers which we use in legacy system. So we use external. So once it is done, we will change it to internal. An example of a use for subnumbers is to monitor subsequent movement made to an asset. In some cases, it might also make sense to be able to report on separate components that comprise an asset by having each component defined as a subnumber. So all those things depends on customer requirements and legal requirements, how they need to report the assets which they are using for their company. So the subnumber usually inherit data from the main asset. The inherited fields are defined in the field status customizing. Now let us see how this asset master record is integrated with plant maintenance. So if we see here, we can see the asset number and the main number as 0 and asset class and the company code. And first tab is general tab, second tab is time dependent tab, and the third tab is assignments. So here in assignments, integration of assets and equipment. So if we want to integrate the asset master data with the plant maintenance, we will assign equipment number. So this is equipment in asset master record. So specify conditions for synchronization of master data. So how it will synchronize? Link from equipment category and object type to asset class. So equipment category is machines, object type is 2000, equity type 2000. Edit asset master record. Create equipment. Saving triggers a workflow. Change equipment. Direct synchronization after saving. Edit equipment master record. So it seems it triggers a workflow. So create asset. Saving triggers a workflow. Changing asset. Data synchronization after saving. So in the background, it seems whenever we create an equipment, it triggers a workflow where it needs to be assigned to the asset master record. Now let us see the theory part. The equipment in the main master record in the plant maintenance component of the SAP S4 HANA system. So equipment is the master record of the plant maintenance. SAP provides standard integration between the fixed asset master record and the equipment. So in order to integrate with plant maintenance, we have an integration between fixed asset master record and the equipment. You can enter the relevant equipment numbers manually in the asset master record, or you can update a single asset in the equipment master record. So if we see in the asset master, we can assign multiple equipments, but to an single equipment we can use only single asset master record. Note that an asset can be assigned to multiple equipment master records, but not the other way around. You can configure the system to create and assign an equipment master record when you create a new asset master record. So how we can do system to create and assign an equipment master record when you create a new asset master record. So we can configure in that way. Whenever we create a new asset master record, we can configure the system like it has to create and assign a particular equipment master record. You can configure the system to change the account assignments of the asset when the equipment is changed and vice versa. And also there is an option to configure in the system to change the account assignments of the assets. So if we see here, with assignments there will be different objects assigned. So that needs to be, you can set up workflows to notify users assigned to plant maintenance roles when new master records are created in the asset or equipment component. So this all needs to be notified to some people, then only they can have a proper control over this equipment and asset master record. So a workflow helps in creating all these notifications to the users. So we understand that an equipment is created and equipment can be assigned to the asset master record, and to one asset master record we can assign multiple equipments, but for the single equipment we can assign only single asset master record. And moving on to asset transaction types. So first we will see the screenshot. So there are different asset transaction types, as we all know. Mainly it is acquisitions, requirement, sale of assets, and many more things. So let us see what actually this screen talks about. The asset transaction type is 100, which is an external asset acquisition. We are actually acquiring the asset externally. And transaction type group is 10, which is acquisition. So if we go into details of this screen, there is account assignment where we are debiting the transaction and capitalizing the fixed asset, and the document type is AA, asset posting. And posting type, do not post to affiliated company. And post net, we have posting types, post gross and post net. So we are posting post net. And other features, consolidated transaction type is 120, asset history sheet group is 10. So this is asset transaction type configuration. So mainly we will configure the transaction type and how that needs to be posted. If it is 100, we are debiting the transaction, and what should be the document type and how it should be posted. Do not post to affiliated company. And posting net amount, and what is the consolidated transaction type, and what is the asset history group. So now moving on to the theory part. Every transaction in asset accounting carries an asset transaction type. Okay, so whether it might be acquisition, whether it might be retirement, whether it might be sale, or different actions. Let us see what are those. There are groups of transaction types for specific operations like acquisitions, retirements, transfers, post capitalizations, investment support measures, depreciation write-ups, and many more. So these are all the different transaction types. The group a transaction type is assigned to defines a lot of basic characteristics for the transaction, such as which value fields are updated, the valid fiscal year, current or previous, the sign positive or negative, the sign of the sum of postings for a fiscal year, and more. This is actually related to group transaction type. It will all the similar kind of transactions are grouped and updated and helps to generate a report at the consolidated level. The transaction type groups are hard coded system settings and can't be changed. Okay, transaction type groups, this one 10, we cannot change those things. In addition, each transaction types has a set of controls that you configure. The specifications can differ according to the transaction type group. Depending on the transaction type group of the transaction type, you define settings such as the following. So the specifications can differ according to the transaction type group. So depending on the transaction type group, we will configure the settings. So whether it is a debit or credit, whether to capitalize, or what is the document type, posting to affiliated company, post gross or net, asset history sheet group. So these are the few things which we configure in the asset transaction types. The main thing is whether it is a debit or credit transaction, whether we are capitalizing that asset, what is the document type, whether we are posting it to the affiliated company or not, whether we are posting as gross or net, asset history sheet group, consolidation transaction type. So now asset acquisitions. So what is actually an asset acquisition? An asset acquisition capitalizes an asset and usually signif- signifies the start of depreciation calculation. So once we acquire the asset, we will capitalize that asset. Once the capitalization is done, immediately the depreciation start date gets updated in the asset master. There are three basic ways to post to external acquisitions in SAP. So one is with acquisition with automatic offsetting, other one is acquisition integrated with accounts payable, and next one is asset acquisition with purchase order integrated with materials management. So now let us try to explore these different ways how we can post the external acquisitions. So acquisition with automatic offsetting. So first let us see the entry. So if we see here, we are debiting the asset clearing account and crediting the offsetting account, asset capitalization with offsetting entry. In the next, so when it is done is, till we haven't received the invoice, but we need to have this entry in the system. So we don't have a supplier yet, so we are posting that to the offsetting account and to the asset clearing account. And in the second one, once we receive the invoice, we will post the supplier account. So now let us see the theory part. So acquisition with automatic offsetting. So when do we follow this method? So the acquisition with automatic offsetting entry is often used to capitalize an asset for which the invoice isn't yet received or has been received and posted to supplier already. So when still we have to capitalize the asset, but we haven't received the invoice or has been received and posted to the supplier already. So or otherwise it has already posted. So in such type of scenarios, we use this acquisition with automatic offsetting. With a posting of this type, the system debits the asset and credits a predefined offsetting account. So it was predefined in the configuration, so it will credit that offsetting account. The idea is that the offsetting entry will be balanced back to zero with the pending invoice entry. So to make it simpler to understand, let us assume an asset is worth 10,000 USD and you need to capitalize it first. So we are going to post an entry saying that asset accounting debit, asset clearing account debit and offsetting account credit. So the invoice is posted in the second step with a tax amount of 10%. So once we receive the invoice, we are crediting the supplier and debiting the offsetting account. We are nullifying and making as a zero balance the offsetting account debit and the first offsetting account credit are nullified and the clearing balance is 0 and tax account 10%, 1000. The second line from each table is for the same amount and the same amount but with opposite directions for direct for debit or credit. Thus the offsetting account is balanced to 0. So now if we see, we have a supplier credit and asset accounting debit, and also tax account debit. So this is how we use the document for acquisition with automatic offsetting posting. The next one, asset acquisition posting. So let us see this. So we are trying to post an asset acquisition. For this, we are using company code, existing asset, and for transaction data, document date, posting date, asset value date, amount posted, quantity, text is acquisition. So let us see what actually this offsetting, automatic offsetting entry, which we have seen in the before screen. So the screen looks like this. So nowhere we are giving the offsetting account, it will be picked up automatically from the configuration. On the initial screen for posting the acquisition, you have the option to select an existing asset or new asset. So if we create a new asset, it will automatically try to create the new asset immediately on the go. You can also post to a specific accounting principle or even to specific depreciation area. The usual minimum fields required to create an asset are available on the screen, which is nothing but description, asset class, cost center. The master data button is also available to fill in additional details. From the same screen, you can select to post multiple assets at the same time. The transaction is very simple. You enter the date definitions, the amount, and where valid, the quantity and line item text. This is enough information to post, but there is a screen with more details where you can make additional definition. So from this you understand, while posting the transaction itself, there is an option to create a new asset, not only a single asset. We are able to create multiple assets, and then we can post the transaction. So additional details screen, if we see here, special specification for document, special specification for transaction, additional info on document. So you can see additional detail screen, the document type, here the offsetting account, and the transaction type. Fields will all be filled automatically from the settings in customizing if you don't manually alter them. The rest of the fields are optional and will remain blank by default. So here nowhere you can see the document type. In additional details, if we come to additional details, it will populate with document type, offsetting account, transaction type, and everything which are required to post the document. Now let us see another method how we post the asset acquisition. It is with integration with accounts payable. So if we see the entry which we updated here, we can see the supplier credit, asset clearing debit, and no offsetting entry, and tax debit. So acquisition integrated with accounts payable is used when purchasing an asset without a purchase order. In this case, the FI posting updates both the accounts payable and the asset accounts in a single step. This is a typical single entry acquisition. So if this is a single asset acquisition. So how it will be? It will be like we are crediting the supplier and debiting the asset and the tax. So if we see this screen, how we enter the vendor invoice for asset acquisition, the screen looks like this. Company code, GL account, asset, amount, tax code, so let us see the theory part of it and we will understand. So let us now see the theory part of this transaction. So the application used to enter this type of documents is the complex posting screen. In this case, you fill the document header first and start building up each line item in a separate screen. You must manually enter the posting key for the second line to debit the asset and transaction type 100 for asset acquisition. You can see the line item for the asset. You can add another asset acquisition. You can add another asset acquisition line by entering the posting key, asset account and transaction type at the bottom of the screen in the next line item section. By selecting the more button, you can enter the reference date, which is the asset value date the system will use as the asset capitalization date. This is how we enter the vendor invoice without purchase order. So now moving on to asset acquisition with purchase order, which is integrated with materials management. First, let us see what are all we do with this integration part. So asset acquisition with purchase order integrated with materials management is probably the most common acquisition method for most companies. It creates a posting like the one created by the accounts payable integrated posting, but with the purchase order details and posted through the materials management invoice verification. So in this case, the flow of document is as follows. So there may or may not be the purchase requisition. A purchase requisition is often the first step of the purchasing workflow. At the purchase requisition phase, you might already have and assign a specific asset master record in the document. Most commonly, though, this is done in the next stage. So the next stage is the purchase order. The purchase order is a required step in purchasing assets with material management. To order an asset, you enter the assignment category A in the line of the purchase order, which will allow you to enter an asset in the account assignment. An important decision to make when entering the purchase order is if you are posting a valuated goods receipt or not. Valuated goods receipt. So we need whether we are evaluating that. Let us see what actually it is. Goods receipt or invoice receipt. With a valuated goods receipt, the asset is capitalized when you post the goods receipt with the value defined in the purchase order. If it is a valuated goods receipt, once the goods receipt is entered in the system, the asset gets capitalized immediately. With the invoice receipt, the system will adjust the value of the capitalized asset if required. In this case, the goods receipt isn't valued. Probably the more common case for assets. The asset isn't updated during the goods receipt. No values are posted until the invoice receipt, and no adjustment postings are required because the value is based on an actual invoice. With the non-valuated goods receipt, the system still uses the goods receipt date as the asset capitalization date. So in both cases, it seems the goods receipt is when they consider the asset is capitalized in the company. So in integrated external acquisitions, the system posts the entry document without a ledger group specification, and as shown in the tables by debiting the asset clearing account. At the same time, the system creates an additional document for each additional accounting principle. So for each accounting principle, it is going to create an additional document. These documents balance the technical clearing account back to 0. So in SAP S/4HANA, we have a new concept of technical clearing account. Instead of offsetting, we will have a technical clearing account. So as said here, the system posts the entry document without a ledger group creation, and as shown in the tables by debiting the asset clearing account. At the same time, the system creates an additional document for each additional accounting principle. These documents balance the technical clearing account back to 0. Let us see. Okay, the additional documents post a debit to the actual asset reconciliation account while crediting the asset clearing account. Will normally debit the asset. Here it is asset reconciliation account, and we are crediting the asset clearing account. The accounting principle specific documents post to the ledger group assigned to the accounting principle and indicated in the relevant depreciation area. For example, if you update 2 accounting principles in parallel, the system will post one operational document debiting the asset clearing account plus two accounting principle specific documents. So if we have two accounting principles, there are totally three documents get posted. One is operational and two is accounting principle documents. One for each accounting principle, in which each document debits the same asset clearing account. Debits the same asset clearing account. You can see the system output when selecting the asset accounting view. To switch between the accounting principles, you can select AP or currency 1. The accounting principle you are viewing is displayed in the document header info section. In the figure, you can see the IFRS document posted to ledger group 0L and the local GAAP document posted to ledger group 2L. The asset technical clearing account is an asset reconciliation general ledger account that isn't entered in the asset account determination. We don't assign the technical account in the asset accounting determination. It has a separate step in the configuration where we assign this technical clearing account. Instead, there is a separate step to define the technical clearing account for integrated asset acquisition. The principal specific documents can be designated to have a different document type than the entry document. So normally the entry documents types is KR, but for accounting principles the document type used is AA. So now let us see the screen how it looks like. So this is the asset transaction without automatic offsetting entry. If we see here, it has updated the ledger group and the document type is AA. One is with 0L and one is with 2L, and we can see the accounting principle is local GAAP and the other accounting principle is IFRS. So one is clearing asset acquisition and other is the asset account. So this is just an example how the screen looks like. So when we click here, we can see the different accounting principles which are getting updated in the background. So the important notes for this is the preceding is valid for the ledger approach to parallel valuation. Whatever we have seen till now, the postings which we have seen is valid for the ledger approach to parallel valuation. So if we are using the accounting approach, the concept will be similar and the operational document is identical, but the details of the accounting principle specific documents are different. Specifically, one accounting principle specific document clears the asset technical clearing account, but the rest of the documents post the clearing balance to a different clearing account. This is because with the accounts approach, you can't differentiate the posted ledger. You always post to the leading ledger. So if we are using the ledger approach and the accounts approach, the operational document will not change, but the documents line items which are posting to the accounting principles, The two for clearing it will change a little bit. If all accounting principles posted to the same technical clearing account, the account would not be balanced. In this case, the zero balance for the books are achieved through matching the asset technical clearing account with the acquisition offsetting account defined for each depreciation area in the account depreciation. The zero balance for the books are achieved through matching the asset technical clearing account with the acquisition offsetting account defined for each depreciation area in the account depreciation. In the accounts approach, all depreciation areas must be assigned to a ledger group or accounting principle. However, all ledger groups are assigned to a single ledger. So these are the 2 points we need to understand. The zero balance for the books. So if we want to, clearing account always should be zero, right? So that we can achieve through matching the asset clearing account with the acquisition offsetting accounts. So for the accounting principles, we have to offset with the acquisition offsetting account, which we define for each depreciation area in the account depreciation. So in the accounts approach, all depreciation areas must be assigned to a ledger group or accounting principle. However, all ledger groups are assigned to a single ledger. At last, all the ledgers are assigned to a single ledger. So this might be a little bit confusing, and I actually made a detailed practice video on asset accounting, which is available in my channel. You can please go through that video. You can get lot more information on asset accounting regarding this technical clearing account. So now we move on to gross and net document types. So if we see this screen, we can see the document type is KR, and we have credited the vendor and debited the asset and the tax. So this says that it is a gross entry where cash discount is ignored. So in the standard system, you will find two kinds of document types for asset capitalization posting. Gross document types, example AA or KR, capitalize the full amount of an invoice minus tax independent of the cash discount. Gross means it includes cash discount. Net document types are AN or KN. This is AA or KR. This is AN or KN, which capitalize the invoice amount minus tax minus the expected cash discount based on the payment terms. Payment terms on the invoice. Let us see how we use this profit and loss adjustment. And we have the company code 1010, document type AN. Okay. Reporting year, reporting period, process, exchange rate differences, cash discounts. So how we are going to handle this? So at the time of payment of the invoice, the amount capitalized for a net posting will be recalculated if the cash discount differs from the one calculated during posting. This adjustment will occur automatically in a company code with document splitting activated. If the document splitting is not active, you can execute the profit and loss adjustment program to correct the capitalization amounts for the relevant asset. So if there is no document splitting, So if we used the net document type and utilized the cash discount, and if we see any differences while posting, we can run this profit and loss adjustment and can correct the values to the capitalization amounts for the relevant asset. So now we have few questions where you create multiple similar asset master records. When you create multiple similar asset master records, which of the following fields allow you to make separate entries for each individual asset? Inventory number, cost number, and description of the asset. Identify some of the fields related to the depreciation area in the asset master record. Scrap value, useful life, depreciation start date. Which of the following original management accounting objects can you assign in the asset master record? Activity type, cost center, order. Which of the following methods can be used to transfer asset accounting? Legacy data. So we can use for large and large to very large, use the legacy data for transfer using a BAPI interface. If it is a manageable quantity, use the manual transaction. For a small quantity of use AS100. Which sequence of steps allows a three-way match in procurement transactions? Only in procurement, purchase requisition, purchase order, and goods receipt. Which elements define the integration of asset acquisitions to the general ledger? So mainly it will be asset class and the depreciation area. So with this, I am going to conclude the part 2 of asset accounting configuration and certification questions. Still, there is more to cover in asset accounting. I will soon meet you all with the third part of the asset accounting video. Thank you all. Thank you so much.